I'm trusting that you're well. Uh, oh, there we go. Some more people coming in. All right, you're hearing the sound of my voice? Just type in patience, patience. If you're hearing the sound of my voice, type in patience. Or type P. Welcome, welcome, welcome. There we go. All right, where are you guys calling in from? Where are you guys calling in from? It'll be great to know. We have a few more people coming in. We'll let them in, and we'll get going really soon. Southeast London, welcome. West London, welcome. I'll let a few more folks in. Ghana is in the building. Welcome, Ghana. The USA. Surrey in the UK, welcome. Miami, or Florida, I should say. Florida is in the building. Welcome, Florida. Nigeria is here. Welcome, Nigeria. Awesome. Now, I'm just going to show you Cleveland, Ohio. Welcome, Cleveland, Ohio. Two seconds. Two seconds. All right. Yeah. So I just want to show you something before we get into the meat of the matter. All right. Our special guest is just about to log in. He was having some internet issues. Who's excited about seeing how this gentleman used the mood swing tool to pass his, I think it was 100,000 funded account. Are you excited about that? Are you excited to see some insights into how he's done it? Everybody's silent. Just drop a yes, no, 100%. All right, somebody's 100%. Absolutely. Yes, 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 for sure. All right, we letting a few more people in, right? Highly excited. There we go. Okay, I want to show you something quickly here before we we get going with that. Now, I've been looking at a little bit of an upgrade to the mood swing tool. And this is just to prevent you from having to go and switch on and switch off longs and shorts, bulls and bears when the market starts trending in one direction or the next. So let me show you what I mean. All right, let me show you what I mean. All right, are you seeing the screen there? So at the moment, we're on mood swing version 3.4, right? That's the one that's live, right? All right, that's the one that's live at the moment, 3.4. But I've been working on version 3.5. You know, I'm always in the lab trying to make some improvements for you. So let me show you what the difference would be. So mood swing 3.4 right here. If I switch it on, usually what I say is, let me just clear certain things out. Let me switch these boxes off for now. So what I would say is when we see our green mood swing level here, that's our indication here that the market is trending upwards. So we should be only looking for buying opportunities. So in our mood swing version 3.4, we go in here and we switch on the bulls and the longs, okay? Because we don't want to put on the shorts and the bears, right? We don't want to put those on just yet, right? Because it kind of creates a lot of noise, okay? If we go down to, say, for example, a smaller time frame, well, there we go. But in the mood swing, which is not, I guess, is not too bad. You can see a lot of noise here. Where you get bulls, you get the bulls and the shorts, and the bulls and the shorts, and the bulls and the shorts coming in, even though we have a red mood swing level. Now, with mood swing version 3.5, right, so this is a perfect example, actually. So if I switch this off, mood swing version 4, and I turn on mood swing version 3.5, and if I just put on the longs, shorts, bulls, bears, you would notice here now that there's no bulls coming into the market, okay, even though it's switched on. And that is because our mood swing level here is actually telling us that we should be looking for shorts, bears. So even though we have the bulls and the bears switched on, we will only get signals for the shorts and bears. You see what I mean here? Look at it. So that sort of filters out all the bulls, the little pullbacks that you might have. We're still looking for selling opportunities because we really want to be only trading in one direction. You see how clear and clean it looks? See what I mean? So if I switch that off and I switch back on the mood swing version 3.4 that you have right now, you see it says bulls here, but we don't want any bulls there. See what I mean? You get it? See the difference? If I switch that off and switch mood swing 3.5 back on, you see it only says shorts. There's no bulls, even though it's switched on. So do you think that that would help you? Because right here, we're just looking for selling opportunities and you see the market just sold off, sold off, sold off, sold off. Do you think that that will help you? Right, so mood swing 3.5 is coming. Stay tuned. We will release that in a moment, all right? So that we wouldn't have the bulls in a downtrending market, right? Once the market is trending downwards, and then it will only switch. You see right here, it turned, right? So we had a lot of consolidation, but then all of a sudden, boom, we got the bulls to go long, and you see how beautiful that went, right? And again, it is just confirming that the trend is continuing to the upside. And notice that we have no shorts or longs here, even though it's switched on in the settings, right? You see it's switched on in the settings here. So you don't have to go and turn it on and turn it off when the mood swing changes. It will do it automatically for you. Right? So I hope that will definitely help. Right, so that's a nice movement there on the Euro USD for a buying opportunity. Mood swing telling us to, we're trending upward now, so we're buying. All right. Okay. Great. So without further ado, yeah, much better, isn't it? Yeah, there we go. So stay tuned. Mood swing 3.5 version is coming. Great. Right. So without further ado, I would want to introduce to you our guest. This gentleman had been in the lab. He's been trading for a while, but he came to us because he wanted to fine tune things a little bit. And then now with the mood swing tool, he's been able to get that little extra that he's looking for to help him with his trading decisions, and off of the back of that, he's been able to pass his funded account. I think it was 100,000. Correct me if I'm wrong. When we get you on, in 2 phases, right? And he did it within probably 2 to 3 weeks, I would say, using the mood swing tool. So without further ado, we're gonna get him on here. He's gonna show us in 7 days, right? Wow, that's crazy. In 7 days, he's passed phase 1 and phase 2 of the of his funded challenge. So let's put our hands together and welcome our very own Jodian to the stage. Let's bring him on. Welcome, sir. Welcome, sir. We're so excited to have you on today.
Hi. Greetings, everyone. Greetings. Thanks, Bali.
Welcome. So, I mean, thank you so much for being willing to come on here and show the people exactly how you've done your thing. So tell us about your trading journey a little bit. Just tell us a little bit about your trading journey. Where did you start from? You don't have to call any company names or anything, but where did you start from, and how did you even end up with us in the mood swing community?
Well, to begin, I started in a company which I will not name. Me and Bali happened to be in the same company together. I joined back in about 2018 and I left in about 2020, 2021. I heard a lot about Bali, but I never met him personally until earlier on this year, a couple months ago. But when I left the company, I was trying to find my way on my own. I was using mainly robots, expert advisors to trade, because when I was in the company, it was stressed more on MLM and less on the trading, even though, they say that you'd get to learn to trade. So I focused on robots for probably like I would say about 2, 3 years, made some money with that. And I eventually told myself that, I don't always want to rely on, artificial intelligence or machines to do what I should have been able to do from the inception when I started about 5, 6 years ago. So I took it upon myself within the past year to actually start pushing myself to learn manual trading. And I learned a bit of ICT inner circle trading concepts combined with support and resistance and like Fibonacci and those things. However, I did not understand or have an appreciation for the sentiment and mood of the market, which is what Bali stresses on. And I got introduced to him by a friend of mine who is a friend of his, and they connected me with him. And since I'm on the inside, and I learned from presenting myself here every Sunday for the most part, every Sunday. And paying key and close attention to what Bali is saying about the news and the economy and what moves what you need to look out for, and practicing it on my own and so forth. I combined that as well as I started to use the mood swing tool to complement what the experience and the knowledge that I've already attained in my recent past for manual trading. I opened $100,000 account, and within 6 days, I passed my phase one. I made $8,000 to pass phase one in 6 trading days. I received the day that I received my phase two, I passed it within 12 hours. I made 5,000, which is 5%. I had to make 13% in total. So I made it 13,000 in about 7 trading days.
Jeez.
And yeah.
Wow, that's amazing. Now, what was it about the mood swing concepts and the tool itself that really helped to shape your decision making? What was it about
For
that?
me personally,
Mm-hmm.
um, I really like the supply and demand zone areas.
Mm-hmm.
So I would typically trade the New York session. However, the Asian session I realize is a really hot session as well.
Yeah, it's been crazy, man. The Asian session has been crazy, I'm telling you.
Yes. So
Uh-huh.
when gold was trending a couple weeks ago, I would get a lot of my early entries for the new price leg
Yep.
on the way up. The next continuation leg, I would get
Yeah.
it in the Asian session. I would use if price didn't come down to the mood swing line, what I would do is I would use the supply and demand, probably on like anywhere between the 1 hour and the 50-minute time frame.
Yep.
And what I would do is I would typically switch between the 3 and the 5 minute to get the first bulls and longs indication.
Yep.
And I would use my own little I know about Fibonacci and so forth, so I would incorporate my own personal
Right.
knowledge. And
Yep.
with
Yep.
that, for the most part, my entries were pinpoint accurate.
Nice. All right. Well, here's what. If you're able to share your screen, just let us go through what you just spoke about in some more detail so that people get a visual understanding of what you're talking about. I'm gonna stop sharing now. I think I've given you the ability to share your screen.
Okay, sure.
Yeah, no problems.
All right, tell me if you guys can see my screen.
It's coming up. Yes, sir. There we have it.
All right, so I have on the mood swing tool. So
Mhm.
an example of what I would do, last Friday, this mood swing line appeared right here. Well, the sweet spot. Um, so what I would do is I would come down to like the 15-minute.
Right, you're on gold here right now, yeah? Mhm.
Yes, I'm on gold. Oh, by the way, I forgot to tell you guys, I mainly trade gold.
Right.
Mainly trade gold. So on the 50-minute, you can see this demand zone right here,
Mm-hmm.
right? So what I
So
would
this
do
is
is
this
once I
is
see
within
this,
this is within the mood swing tool as well, right? So could you show people how to switch that on and off in the mood swing tool in the
okay,
settings? Yeah. Okay.
would be the
So if we go down some more, it'll be in
and yes, and
the-
internal structure,
yeah.
order blocks,
Yeah, that's right. So if you go down a little bit further, right, there
right
you
here,
go. Internal order.
internal order blocks.
Yeah, that's
Yes,
it. Yeah.
right.
Right.
So I have these turned on,
Yeah. Right. Right. Okay. Cool.
right. Um, so on the 50-minute, I would have this supply zone in mind.
Mm-hmm.
And when price actually came down a little bit after the New York session, it came down around, the trade was around 12. So what I also did was that I have my fib tool, my fib retracement tool. I pulled it from this swing low right here, where price would have swept this liquidity right here, where it says it has equal lows.
Mm-hmm.
But pull it from right here
Right. So these are
to the
concepts.
high.
Wow. Okay. Yeah. There we go. So these are certain concepts built into the tool as well that we haven't even touched on, but because you have a fair understanding of trading, then yeah. Go ahead.
Yes, so price would have pulled back into my golden area. So once I saw this, I first start like on the 3-minute time frame, right? And I got a bull's indication right here inside of my Fibonacci zone, coming out of the demand zone on the 50-minute. What I would usually do is once it taps into my zone here and I see rejection coming out, especially where I saw this low right here, price dipped below it and came back up immediately, and it started rushing to the upside, breaking minor structure here. What I would do typically is take my long position. As I place I would have probably entered somewhere around here, right? I would have put my stop loss right here. And I would have been targeting, let me go to the higher time frame. I would have been targeting the previous high right here, or this red box, which is the supply zone, easy target. And this is typically what I would do. Now, if I used the sweet spot, I would have gotten a better risk to reward. Sometimes, for the most part, I do use the sweet spot. However, if sometimes when I come to the markets for the trade, I realize that price has already
gone.
touched this. Yes. So that's when I would come in and I would use my manual knowledge and the Fibonacci. I would look for the bull's indication, and then I would enter on my own. So that's kind of what happened here. As I came to the charts, I took my eyes off of it since I saw nothing of interest at around 9:30, 10 o'clock. Price had already it was already moving away.
What time zone are you in, sorry?
AST.
Okay. Right.
Atlantic Standard Time.
Yeah.
Yes. So I got in a little later.
This is the New York session.
Yes, in New York session.
Yeah.
I got in a little later, but I was able to take advantage of this move.
And how many pips we looking at there?
About 200, 256, 260 pips.
Yeah, only, right?
Yes, only because usually
in a ranging market as well, right? The gold is ranging at the moment. So to catch that in a ranging market is good going.
When I was doing my challenge, the biggest trade that I caught when price was trending, I would have sent you a picture, Bali. The biggest trade I caught from using the bulls and the demand zones.
Yep.
Because when gold was what I realized was when it was trending really hard, it was barely even retracing, and it was barely coming back down to the mood swing line.
Yeah.
So that's when I had to use the demand zone, my own skills, and the bulls. And I was the biggest trade I caught was probably like 2,000 pips. I just held it.
Wow. 2,000 pips.
Yeah.
Well, I mean, when the market is trending, this is where the tool comes in really, really handy. Is really good for a trending market. However, we could do certain things like putting on these equal highs, equal lows when we're starting to see a ranging market. Then we could start putting all these other things on, your supply and demand zones as you're using it here in a ranging market for sure. Yeah, excellent. Now let's talk about risk for a minute. How much were you risking on
I personally, on the prop firm, I personally don't like risking anything I risk between 0.5 to 1%.
And that's
after 1%. I don't like risking more than that.
Yeah, so keeping the risk low is extremely important.
Yes. Right. And personally, if I take 2 losses, I'm out. I don't want to be gambling.
Right. So if you take 2 straight losses, you're done for the day.
I'm done. Yeah.
And then you consider yourself a day trader, scalper, or how do you consider yourself?
I would say if the market is ranging like this, definitely intraday. It's a scalper, but once a market is trending, I try to hold my trades. I try to swing them. If I realize that I have a large target and let's say price has reached the target and it wants to break and continue, what I would do is I would probably take off half to 3/4 of my position, put my stop loss at break even or even trail it, and just let the rest run and don't even look back at it.
Yeah, but when do you take profit though?
Well, when I trail my stop loss, whenever it comes back down and strike it, I would
All right, okay.
But in the meantime, on other days, I would be looking for other opportunities. But that trade, I would just leave that in the background, let it do what it wants to do, because my stop loss is already inside a profit. It's something I don't really have to. I just shift the stop loss as I see new structures formed.
Gotcha. Okay. So kind of give us an example of that when the market was trending. So if you zoom out a little bit and let's go to when the market was actually like falling off. I guess you could switch. Let's see. We had a lot of ranging. We have a lot of ranging happening right now on gold.
Yes.
But I guess you could switch the bulls off for now so that it keeps it a bit clear.
Okay.
Style under style. Yeah.
Yes.
Cool. All right.
That's it. You want me to turn on the turn on the bears, or you want me to leave it like that?
No, you can leave it. Yeah. Mm-hmm.
All right.
Yeah.
Okay. So you want me to buy example or sell example?
Well, the sell example, when the market started falling off.
Okay, so for example, if I would have taken
so you could actually switch on the shorts. Yeah. Right, there you go.
Okay, I would usually go to the 5. Let me go back to that area. It started selling off. So let's say I would have taken a sell somewhere around here. I would have taken a sell right there. Get the short position. I would have taken a sell right here, and I put my stop loss above here, and I'm looking to target this low. Now wait, let me look for.
I was just about to say that low hasn't been formed yet. So
yes. Let me zoom out. Let's say I'm targeting. Let's say I'm targeting this structure over here.
Yeah.
To the left, where these highs are right here as resistance.
Okay, got you.
When price comes here, when I see it,
if you put a line at that resistance level, yeah.
Yes. When I would see price come and reject here, personally, I would either take all my profits. So this is about 900 pips. That's a big trade for me. I would either close the entire position, but seeing that price over here broke this structure right here.
Yep.
This would be a very this is big for me because this is a break in major structure in the higher time frames.
Right.
So I would expect it to sell off some more.
Right.
But if I see it rejecting here, what I would probably do is, if let's say I took a standard lot, what I would probably do is I would close off. I would take profit of probably like a 0.8 and leave like a 0.20 running. I would now remove the risk. For example,
yeah,
the market would have came back and struck me.
Yeah. Stopped out.
But sometimes if I get a continuation to the downside without it coming back up and taking my stop loss, I would then, for example, let's say I took the trade over here, right? So let me see. Let me do this over. Let's say I took a short over here after I got stopped out, right? Put my stop loss above here. Let's say I'm now targeting this low again, because the price would have now formed this low over here.
Yeah.
Now here, what I would do now, this is 1,300 pips. This is a lot. That's a big trade. What I would do after, let's say I take another one lot, that's $13,000. Let's say I took 12,000 or I took 10,000 and I left 3,000 inside. I would now move my stop loss at the entry, break even. And as price continued to sink, it would have never came back up to my entry. So I would be going deeper and deeper into profits. What I would then do is I would then, let's say this is the stop loss. I would then move the stop loss. As I see more shorts forming, I would now move it to here. Let me use a red line instead for my stop loss. I would now move my stop loss to here as I see this short form. Then as more form, I'll move it down lower. So I'm protecting profits because my initial trade was up here.
Yep.
And then I would keep doing that, and I would move it here until price came and it took me out over here. And I probably would have had another 1,000 or 1,500 in profit again.
Gotcha.
Additional.
Gotcha.
Yeah.
Oh, nice. Okay, so that's just trade management for you. Awesome.
Yes.
Yeah. So now we're in a ranging market. How do you suggest we approach this? Because the market is ranging right now. It's not going to be trending that much. What do you think?
Me personally, I tend to I try to stay away from ranging markets because they tend to be a lot more difficult to trade because
Yep.
at any point in time, price could reverse on you within the range. And I do typically take more losses than wins in ranging markets unless I'm very patient. And what I do specifically is if I have a range, let me go back to a higher time frame. So this is the range right here. Let me just take this off for a second. If I have a range,
you could see your supply and demand zones are very, very tight together.
yes. So I put it back on. Right. So the demand zone, the supplies won't be up here, the demands won't be down here. For example, what I sometimes do is that I would take a box, I would mark from the bottom of the zone to the top of the zone. And let me put it on a lighter shade so it doesn't look as distracting. So I have this zone marked out, and what I would do is when price reaches to the top, if I realize that it's not breaking out and it's probably either sweeping liquidity or it's going to make a lower high, I'll wait for the indication of like the short, and then I'll sell it to any of the lows inside of here, all the way down to the bottom. And if I see price vice versa comes to the bottom of the range, or it comes to any of these lows, and it sweeps and I get the bulls indication on the lower time frame, I will then trade it back up to the top of the range or any of the highs within the lower highs within the range. That's that I tend to perform best when I do that.
Yeah,
in a range in market.
So trade the extremes of the range as best as you can. Once you get that confirmation of a rejection of the extremes.
Correct.
Yeah.
That's the safest because when I trade in the middle or I trade in between,
it
chops me straight, and the amount of stop hunting, the wicks is just crazy.
Yeah. So at the moment, we should really be just sitting on our hands.
I definitely advise, definitely sit it out.
Yeah,
for sure.
Yeah. So if we pull up, say for example, a GBP USD, so if you pull up GBP USD on the IC market feed, and for a lot of people, I suggest using the IC market feed. Yeah, so we actually had a nice trade there on Friday for the buy. If you were in the
this is beautiful.
Yeah, that's right. So again, it was trading above the mood swing level. It didn't really pull all the way back to the mood swing level, but then if we switch to
bulls,
that's right, because it's above our mood swing level. So people, don't worry about it because we will have 3.5 out where you don't have to switch. And you drop down to like a 15-minute time frame.
Typically, Bali, what I would do is when I see that this BOS right here on the mood swing, when I see this.
So BOS, for those people who want to know what BOS stands for, that is called breakup structure.
Yes, as soon as I see this break of structure on a 1 hour time frame, which is significant,
Yep.
right? I'll be looking.
For
The
bulls.
bulls is coming up on the higher time frames. If I go down to like the 15,
Yeah.
look at if I were to take a buy position,
Yeah. When
just
the
using
bull
that alone,
appeared
right here,
after
when
the
it
break of structure.
retested, break, and it came back down, it retested, and I were to take a trade right there.
Yeah.
Probably put my stop loss below this mood swing line
Yeah.
and go to probably like, let's say my higher time frame and
Yeah.
just start
You're
targeting, let's say I
looking at
target here or up here.
consolidation. Yeah.
This
Or
is
you
a
or even you see that consolidation area.
yes.
Yeah, right there. Yeah, like that previous consolidation area.
Yes, easy 1 to 2.
Yeah, that's right. I mean, you can even target the mood swing level in that consolidation area.
And
Yeah, right
this would
there.
have been no drawdown. The
Yeah,
price would
that's
not
right.
have put me in a negative at all.
That's it.
Yeah.
Right. Sweet. If you go down to a 15-minute time frame, and we just look at on Friday, when we looked at this during the London session, I think it was, or can't remember if it was London or before. So, but anyways, we got those bulls for a buy
Yes.
on the GBP USD, and then boom, price just pushed up quite beautifully there. So nice one.
Yes, and this demand zone,
Mm-hmm.
these are what I look for. So even if price didn't quite pull back to the sweet spot or the entry, I
Yeah.
would have seen this. Then
Yeah.
when this bull confirmation came in, I would have entered personally.
Right. Okay. So as soon
Again,
as that or supply and demand zone showing,
right here, and then put
yeah.
my stop loss below the demand zone.
Yep.
Start targeting probably the top of the range or this wick right here, and you'd have gotten it.
Sweet.
Again, another 1 to 2 again.
Yeah. So that in itself is another strategy that we could add to the toolkit, where we have our supply and demand zones switched on, right? So it gives us that added confirmation. And then we have our bulls on, or we have our longs on. And once we have that rejection after a supply and demand zone, that is just an added confirmation that we're going to be getting in to the market. Awesome. Thank you so much, man. And thank you so much for sharing with us, and continued
Absolutely.
success. I just want to show few people who came in just the change that we're adding to the tool. So I'm just going to take over sharing my screen.
Yeah, sure. Go ahead, sir.
Thank you very much. Right.
Absolutely.
So for those who might have come in a little bit late, right, we're just gonna make a little bit of an addition or a change to the mood swing tool. So let's just say, let me just go back on the GBP USD, for example. I see market feed. Okay. So what we're going to do here is previously we were saying once the price is above the mood swing level, then you go into, switch this 2 seconds. Switch that off. Right, yeah. You go into the settings and then you change it from, say, for example, this mood swing level is red. So we want to change it to shorts, and then this mood swing level is green. So we change it to bulls and longs. But if you notice here, I've actually got all of them switched on. So you don't need to change it anymore, right? Yeah, you don't need to change it anymore. It will just do it automatically for you. So once we're trading above this green mood swing level, we would only see bulls and longs, right? In the current version that you have, if I switch this on and I put everything on here, you notice here that you have bears coming into the market, where that is not necessary because we want to only be trading in one direction. Okay, so that's the current version that you have right now. But in the new version, right, with everything switched on in the new version, notice that there's no bears coming in when we do have more market trending up. Okay, So that will be the change. Right? Notice as well when the market is trending downwards below our mood swing level here, then we wouldn't have any bulls coming into the market, right? And we wouldn't have any bulls unless it switched above the mood swing level for a little bit. But in scenarios like this, where you're seeing bulls along and then shorts bears coming in, you know that is pretty much a range in market until things break, right? Until things break out. All right. So that will be the main change there, right? So one of the strategies, so just reiterate, one of the strategies that Jodian touched on is we could go in here, we could switch on our internal order blocks, right? Make sure that's switched on, and then ensure in our style here that the boxes are switched on as well. So say, for example, on GBP USD, for example, on Friday, we did get in on this bulls and long, but if we go down to smaller time frame, right? So we have our supply demand zone here, right? So this is a rejection off of it. Then we get the bulls or the longs, whichever. That is your confirmation that we could get in there now for the buys. It makes it a whole lot easier. And then we could start targeting, say, for example, this supply and demand zone. Or if you did get in and you have a risk to reward ratio, so right here, we have 25 pip stop loss, and there we have a 50 plus pips. So that 2-to-1 risk to reward ratio, boom, you get in on your trade and you're pretty much out. Okay. For the moment, we still pretty much bias for a long on GBP USD, but we'll have to wait for mood swing level to open up, right, to give us an indication. More than likely is going to be a green mood swing level. Anyways, we'll see where it sits, right? We will see where it sits. For an indication as to whether we're going to continue with that buying opportunity, okay? So we will have to wait and see. Now, one of the things that a lot of people have pointed out is, or they were asking, when is that mood swing level going to print? And it usually prints in the first hour of the Asian session. However, if you want to see it quicker, you drop down to a smaller time frame. So drop down to like a 5-minute, a 3-minute, and then you would see the little green line or the little red line forming, depending on how price is trending. You would see that price. That price is a significant and key price for you. Okay. So that's just one other thing to note. So stay tuned, because I believe next week, Sunday, is when we will release the update of that 3.5 mood swing tool. So stay tuned for that. All right. And in the meantime, in between time, we still have that US government shutdown happening. So that is really impacting on the news that we're getting for the US economy at the moment. But we have some massive news coming up next week for the pound, okay, which is the GDP. That is going to be huge. That's next week, Thursday, okay? So would the price reverse right now? Probably not. It might reverse on this news. I'm still looking for a continuation bias to the upside, but we will see. But at least we know the GDP news is coming up for the pound next week. That's gonna be big. All right. Awesome. So with that said, we're gonna wrap it up there for the minute. I want you to have a fantastic week, everyone. We will see you on the inside. And thank you so much, Jodian, for your insights there today. Thank you so much. Bye-bye.
No problem.
For now.